in this presentation, we're going to be talking about the stock market. And I'll show you in a bit just exactly the flow of the presentation. But let me ask, which of these two images actually comes to mind when you hear the word stock market or when you think stock market? You can say top right or bottom left.
Bottom left.
That's your left. Bottom right, sorry. So it's top left or bottom right. It's bottom right, right? So the aim of my presentation is to, by the end of it, to get you to appreciate the stock market as more the top left. All right? So here's what we're going to be talking about. We're going to basically, you've gotten the introduction to me already, so I'll be quick about that. I'll talk a little bit about what Caribbean Value Investor is, a sentence or two. Then we'll talk about what's the stock market, how does the stock market work, and then we'll get into how you benefit from the stock market. We will look briefly at risk and the associated risk for investing in companies or public equities. And then we'll talk about an investment philosophy and a time horizon. Lastly, we'll look at the skills and tools that actually make you money in the stock market. All right? And I will try to be fast. This presentation is about 45 minutes long. I'm going to cut that down to about 20-30 minutes thereabout. All right? So most of this has already been said. I should mention I am not an investment advisor or financial advisor. So all the information that I will translate and relay here is strictly for informational or educational purposes. It is not meant to be taken as investment advice. Neither is any company that I mention an endorsement for you to actually go out and buy that stock. Okay? Also, if there are any questions midway, then you can ask me. So I'm already a shareholder in Grace Kennedy, NCB Financial Group, RGR, Wisynco, Indies, etc. This is a little bit about my background. So my degree is actually in medical physics and electronics, but since then, I graduated the UWI in 2014. Since then, I've taken the JSE Securities course. I was one of the better performing students, a grade about 86. I did the Bloomberg Markets Concept course, as well as I did short courses in financial analysis and accounting. Caribbean Value Investor is the company that I developed. It's focused on basically three prongs. One being to cover and analyze public equities. So that's the news website. We also have a financial engine, which we dub FinGen, and that allows persons to analyze companies basically side by side. So if you're looking to invest in NCB or you're choosing whether to go with Sagicor or Scotia, the FinGen platform will actually allow you to do a comparison immediately between the two to look at key ratios and then make a decision as to which is the better investment option for you. The last part is in education. So a large part of what we do is in educating persons about the stock market and about concepts in financial literacy in and of itself. This presentation is a part of that drive or thrust. And then my website is CaribbeanValueInvestor.com. All right, so let's talk about the stock market. Earlier I asked which image came to mind when you think about the stock market. And for most persons, it was the bottom right image, something looking very similar to this. I would like to propose to you that when you think about the stock market, you can think about it as just another market. So here, what you're looking at is basically a fruit market. The difference between this and the stock market is that whereas in the fruit market, you're able to select multiple varieties of fruits or vegetables, in the stock market, you're able to select from a variety of companies, public equities. So these are companies that have come to the market, raised money, and are now looking to basically expand. You purchasing shares in those companies makes you what we call a shareholder. So I want you to look at this image and observe that you're able to see different varieties of fruits and you're able to see a quoted price. We all observe that? Yes. The stock market is where you will see the varieties of fruits. The variety on the stock market is companies. So here we have a few of the better known companies that are on the stock market. If you go to the Jamaica Stock Exchange's website, which is jamstockex.com, it's at the top of the screen, you will see the quote sheet running across the screen. If you click on any one of those, this page is very much similar to this one. So what are we really looking at here? We're looking at different securities on the far left of the screen, and we're looking at the prices. I'm going to take you through briefly about what the other titles at the top of that screen mean. So if we start from the left, where you see security, what we're talking about is the name of the different companies. So for example, 138SL is 138 Student Living, which is a company that now operates the dorms on the UWI campus. Something that you may be more familiar with is CCC, Caribbean Cement Company. If you go continuing down, you see CAR, that's Carreras, GK is Grace Kennedy, JSC is Jamaica Stock Exchange, KW is Kingston Wharves. All right? So now you're able to identify what your options are in terms of which companies you can buy stock in. This list is not exhaustive. So if you go on the JSC website, there are about 80 companies. This is a truncated list. All right? Now, the next column talks about the last traded price. On the stock exchange, how it operates is that you're able to buy and sell the shares in these companies. The last traded price is simply telling us what was the last trade that was transacted for that specific stock. That's clear?
Yes.
Continuing across, you see the close price and the price change. The close price is simply the price that the stock traded at. It's basically an average of the last 3 trades that happened in that stock for the day. That's what the close price is. The close price basically gives you an indication of what price you can start to buy the stock at the next day that the market is open. For information, the market is open from 9:30 a.m. to 1:30 p.m. Monday through Friday. All right? So those are your available periods in which you can actually purchase stock. The price change is just a difference between the close price of today and the day before. That's the price change. Let's talk about the bid and the ask. Now, the bid and the ask relate to just how the transactions work on the Jamaica Stock Exchange. So it's like an auction. So you being a shareholder, owning Grace Kennedy stock, you can put up an ask price if you're willing to sell your stock. So let's look at that for example. So the person who owns Grace Kennedy stock is asking $60 per share. All right? By the way, can you all see that? I know it might be far for a lot of you. But the number there is $60 per share. That's Jamaican dollars. All right? A person who is trying to buy the stock is going to bid on it. How many people here have actually been in an auction or are familiar with how an auction works? Yes? Okay, good. So you go, you place your bid. If somebody else outbids you, then that person will be the one taking home whatever item is on auction. Say it's the same situation with the stock market. All right? So this person here is now, the closing bid was $59.80. So this person is clearly trying to get a bargain off the ask price. All right? The volume is just the total amount of the stock that traded per day. The high and the low for today show the highest that the stock traded at and the lowest that the stock traded at respectively. Fairly straightforward, yes? And then you're looking at the 52-week high, 52-week low, which basically tell you the highest and the lowest that the stock has traded over the past 52 weeks. So that's over the past year. All right? And then the last 2 columns relate to the dividends that are paid per stock. And we're going to talk about what a dividend is. Okay? So by just understanding this, you basically have the foundation of how to understand the stock market, how to interpret the data that you will see there, and how you can actually go about purchasing equities. So that's why I spent some time on that slide. So can you see then that this slide is very much the same thing as what we just looked at? Except there is no bid and ask or whatever. You'd have to talk to the store manager to find out what that is, right? But it's fairly similar. So then what's a stock? How I like to explain a stock, and you can read that while I speak, is I like to think about a stock as a certificate that denotes ownership. It's not unlike the title of a car or a house. So whereas the title of your house or the title of your car dictate or illustrate the fact that you are the owner of that asset, the stock, which is no longer represented as a physical certificate, represents the fact that you are a part owner in the company. All right? So we talked about how the stock market works, that bidding system. So this is basically all of that in text. Right, I should just briefly mention this. So basically what the first requirement you will need, or the first requirement in order to be able to purchase stocks, is an equity or a brokerage account. And you can get that from any one of the 13 brokerage houses in Jamaica. I can give you the short version by just saying most of the approved financial institutions in Jamaica have an investment arm or a stock brokerage arm. So Scotia has Scotia Investments, Sagicor has Sagicor Investments, NCB has NCB Capital Markets, and there are other boutique firms such as Barita, SSL Stocks and Securities Limited, MVL Brokers, etc. All right? Mayberry, exactly. Mayberry is also one of those boutique firms. It's a brokerage house. So you need to get an account with a brokerage house, and that brokerage account enables you to start to purchase and sell equities. So your bank account will hold your cash, your equity account holds your equities. So how do you benefit from investing in the stock market? There are two ways. We spoke earlier about one, which is a dividend, and the second is through capital appreciation. But what's a dividend? A dividend is an actual cash payment. It's a check that the company will send to you, the shareholder, for being a shareholder. So it's basic. I should mention though that not all companies pay dividends, and in fact, no company is obligated to pay dividend. Once you become a shareholder, what you're really doing is you are taking on the risk of the other owners of the company. If the company is profitable and continues to be profitable, and there is excess cash above what is needed to fund the operation of the company, then the company may elect to pay a dividend to you, the stockholders. All right? And that's just one way in which they reward you for participating in the risk that the company faces. All right? The second way is through what we call capital appreciation. And you can stop me midway if I'm getting too fast or... Okay. So the second way is through capital appreciation. Now, for capital appreciation, this is simply an increase in the price of your stock. So you buy a stock at $1, it goes to $1.01, you have experienced capital appreciation. Even if you don't feel it. Now, there is also portfolio. So this would be constituting a portfolio gain. When we talk about risk, we're going to talk about a portfolio loss, which is the exact opposite of where your stock goes up. So it's where your stock goes down instead. Okay. So, to illustrate capital appreciation, this is Scotia Group. And you can see here, well, not all of you will be able to see it, but on May 8, 2019, the stock price was around $50 Jamaican 25 cents. A few months after that, on October 4th, the stock was at $61.50. That's around a 30% gain. All right? Where was I? Okay, continuing. Now, this is an extreme example of capital appreciation. In 2018, the Barita was the best performing stock on the Jamaica Stock Exchange. Investors in Barita experienced a 611% capital appreciation. For this year, Fontana was the best performing stock on the JSE. And investors in Fontana would have experienced a 370% capital appreciation. I should also mention that for the top 10 best performing stocks of 2019, they all returned triple-digit gains, all in excess of 100%. And that's over a one-year period. So, all right, so let's talk about the risk. And I think I want to, all right, so the first one is, of course, portfolio loss. So you buy a stock with the expectation that the stock is going to go from a dollar per share to $3, $2 per share. And instead the stock goes to 70 cents. You are now experiencing what we call portfolio loss. And for a lot of people, that's a headache that they cannot manage. And that brings me to the fact that you are exposing yourself to two different types of risk when you invest in the stock market. The first is actual portfolio loss of your money. Because if you're supposed to sell that stock, then you would have, let's say you went into $10,000, you bought 10,000 units of said stock, it's now at 70 cents, you're coming out with $7,000. So you lost $3,000. So that's the first risk. And the second risk is that you may not be able to sleep at night. All right? Because if you're the type of person who has to watch your stock price up and down every day, then I can tell you it's going to give you it's going to cause you quite a lot of discomfort. All right? So how do you deal with the risk? By developing what we call an investment philosophy. Now, what is your investment philosophy? It's a set of guiding principles that basically dictate which companies you invest in and at what point or at what price. So there are different types of investment philosophies. You have, for example, the short-term day trader, who is the person who can deal with the fluctuations in the market, and he's just looking for slight increases in a stock's price, but of course acquiring a large enough volume for that to make sense for him. So this is a person who is looking for 5, 10%, but he's investing 100,000, 300,000, $1 million. And so a 5% gain in a matter of hours is material for him, because if he can do that on a daily basis, he is coming out with a significant capital appreciation on his invested funds. All right? There is the growth investor, and if PowerTech, right? If PowerTech were a public company, then I would actually consider it one of the growth companies. What's a growth company? A growth company is a company with the potential to do 1.5 times what the revenue is. Well, 0.5 higher than what the current year's revenue is. It's a company that you can look and say, okay, 3 years down the line, this company is currently doing $10 million in revenue. It could be doing $50 million in revenue 3 years down the line. That's what growth investors look at. And they want to participate in those companies because what we find is that the stock price tends to move in proportion to the revenues of the company or to the net profits of the company. And in fact, we have found that the rate of growth in a stock's price tends to far outweigh what the growth rate is for revenues. So for example, we showed you Barrita's 611% in 1 year. Barrita's revenue didn't grow by 611%. But the perception attached to the fact that Barrita is able to grow is priced in to what investors are willing to buy it for and what they're willing to pay. Wouldn't that happen in Fontana's case? That actually happened in Fontana's case. So that's why Fontana is up 300+%. Because they're new, they're young, new. Not new. No, not in terms of new, in terms of movements, but in terms of the investments, based on what they're doing now. Yes, yes, sir. Very correct. So the innovation, the launch of the new flagship store, the intention to also go to Portmore, all of that. These are factors. These are qualitative factors that make the company, that enable investors to perceive the company as more valuable. Like Wigton Wind Farms. All right, so I have a different perspective on Wigton, but we'll talk about that off here. All right? And then you have what is known as a value investor. And I'm not going to spend much time after this, just to expose you guys to the other two philosophies. The value investor is a person that is actually looking to invest in companies that have a long-standing history, a proven track record of either growing, paying dividends, or just withstanding the economic and business cycles. So Grace Kennedy might be considered a value company. Sagicor, NCB, Kingston Wharves, Scotiabank, all of these companies that have stood the test of time appear valuable to the value investor or appear appealing to the value investor. My personal philosophy is a mixed philosophy, and it's called the growth-oriented value investor. So I'm looking for companies that are going to grow, but also show the potential. I'll send the presentation. All right. So, but also show the potential to withstand the economic cycle and be here 10, 15, 20 years from now. All right. And then, so let's talk about now the skills that are required for success in the stock market. Now, me putting reading up there might seem a little jarring. All right. However, what we find is that you can minimize your risk just by the amount of information that you have on a particular company. I'm in groups with persons who have stocks that they've never even read the prospectus of. That to me is unwise. I think if you're going to invest in a company, the first thing you need to do, aside getting the brokerage account, is to invest the time to understand the business that you're investing in. Remember, you are taking on the same risk that the company is exposed to. So you definitely want to understand what these risks are. What's the potential for the company to actually grow? And what are those things that the company is susceptible to that are going to cause your stock price to go from $1 to 70 cents, all right, and cause you to not be able to sleep at night. So if you know that, then you are basically developing what we call a leg up on the other investors in the business. You now are able to look at that 70 cents and be like, I know my company is growing at 30% per year. So next 2 years, I know what revenues are going to look like. I'm getting a discount when the stock has now dropped from $1 to 70 cents. All right? And I like to buy companies like that. All right? And again, we'll talk in the question and answer section about some of those companies and some of my experiences in buying companies like those. All right? And, oh, good. So we're at the last slide. So there are certain tools that Caribbean Value Investor has developed. One of them is a compound interest calculator. And the whole point of this is basically to tell you, if you're starting to invest $10,000, $100,000, and you're able to get a return, a modest return of 15 to 20%, or even an exorbitant return, 30 to 50% per year, how long will it take you to reach a particular target? So let's say, for example, so this is what the page looks like. And if you type in compound interest calculator CVI, then you will get the page. It's available online and you can use it at any point in time. So you simply enter what your initial investment is, what the interest rate that you're looking to get per year is, what your target amount is, and then you run the calculation. It will tell you how long it will take you for your investment to actually, for your initial investment to get to your target. Sure, I'm actually through.
Is there a specific requirement to have access to CVI?
No.
It's free.
It is free. All right. Caribbean Value Investor also developed what we call the target exit calculator, and this is just an Excel sheet. I can send it to Mr. Grayson and he can disseminate it. All right. But basically what this tells you is it will tell you what price your stock needs to be in order for you to realize a particular net profit. So when you're using this, you will input certain pieces of information. Other pieces of information will be auto-populated. But let's say, for example, you're buying NCB shares. You will put in what the number of shares that you're buying is, what the market price that you paid per share is. It will automatically calculate all the other fields, tell you what the true share price is, because there are fees associated with your purchase. So when you're spending $10,000 buying a stock at $1, you're not going to get 10,000 units of the stock because there are fees associated. The fees are about 2%, all right, of the amount that you're investing. But what the calculator will do is it will tell you what price the stock needs to get to in order for you to come out with X amount in terms of a capital appreciation, whether that's 10%, 15%, 20%, it doesn't matter. You just put in what your desired net profit is. And the calculator will tell you, All you need to do, set
Is
this
there a timeline for that?
At-
Is there a time
on the calculator.
on the calculator?
No. So the time would come into place when you are actually setting your exit on the JTrader Pro platform or on whatever platform. Or you could simply send an email. So let's say you're buying NCB with a 6-month time horizon and you're looking to get out with, say, 25%. You can simply, the same email you send to your broker to buy the stock, can immediately send an email after calculating what the exit price is and say, sell it when it gets to this. And in that way, you don't have to think about it. All right? I wouldn't necessarily suggest that you buy NCB with a 6-month time horizon. All right? Just because I understand the value of the company. And then here are your 3 takeaways. So the stock market is just a market. You can go there, you can look at the different companies, you don't have to buy. You go to high-low all the time, probably, or any other market. You don't necessarily buy everything that you see there, right? But you go there when there is something specific that you want. So you can look at the stock market in the same way. And again, the stock is a piece of the title of a company. So if you consider the stock as the certificate of ownership, all of the stocks together comprise the full title of the company. You owning even one is you owning a part of that company. All right? And then the last thing, of course, is to take action on the information that you receive. You can't benefit from just knowing what the stock market is. You have to take action to actually get a brokerage account and to actually put some skin in the game. All right? And for this one, I'm actually going to send you the guide to Jamaican securities. I've also written a book. It's a book that you can read in 30 minutes. Remember my first investment? First investment is a time to understand the market. So I'm going to send you, all of you here, a free copy of my book, which is called Stock Market Investing 101, the basics of learning to profit from the stock market. All right, it's 30 minutes, and you can read it, and if you have any questions, my contact information is in that book. All right, so I want to thank you all for listening. Thank you for your attention. It's definitely been a pleasure.